I hear this constantly. I don't want an HOA. And that statement carries emotion. It carries stories. It carries assumptions. It carries experiences people have had elsewhere. And in many parts of this country, that preference makes complete sense. There are markets in the United States where non-HOA neighborhoods are pristine. Homes are large, values are strong, streets are clean, landscaping is consistent, and no centralized governance is required. It works because those markets operate under different structural pressures. The climate is more predictable usually. Storm exposure is less aggressive. Insurance markets are more stable. Infrastructure ages slowly. Drainage systems are under constant stress. Roof replacement cycles are longer. Community standards evolve socially, not contractually. In the environment, decentralized government thrives. Individual autonomy does not decentralize the ecosystem. Florida does not operate under those same conditions. And this is where buyers often carry assumptions, other states into the market that behaves differently. Florida compresses risk. Storm cycles here are recurable. Insurance carriers do not simply just give great premiums, they exit the state constantly. Roof lifespans are shortened by sun and storm intensity. Drainage engineering matters, retention ponds matter, flood zones matter, seawalls matter. So when someone says, I don't want an HOA, what they often are expressing is a desire for autonomy. And autonomy is not a flaw, but autonomy in a compressed risk environment means assuming individual responsibility for variables that are not small, like roof replacement timing, insurance negotiation, storm preparation, infrastructure repair, and not every buyer calculates trade consciously. Now let's go deeper. Planned communities in Florida are not popular by accident. They create structured predictability, sidewalk systems mapped intentionally, running trails are maintained, street lighting is uniform, landscaping is scheduled, pools serviced, clubhouses are staffed, security is layered, and for families that means children can actually ride bikes again within visible boundaries securely. It means women can run early morning, evening, within controlled path systems safely. It means dog parks are enclosed and maintained. That rhythm reduces psychological stress. But here's the financial layer. When environments are structured, buyer psychology becomes more consistent. Consistent psychology reduces resale volatility, not because values always rise faster, but because they swing less erratically. In a volatile insurance and storm environment, reduced variance carries weight. Now, we balance this honestly. Governance alone does not guarantee stability. An underperformed HOA is dangerous than an HOA at all. Its reserves are weak. If insurance deductibles are extreme, if litigation exists, if delinquency rates are high, if special assessments are looming, they and structure become very fragile. And fragile structures collapse under pressure. The question is not, do I want an HOA? The question is, what is the financial condition of the governance structure? Because governance quality matters more than governance pressure. Now let's make this practical. The HOA fee itself is not the risk. The condition of the HOA is the risk, correct? A $300 HOA can be far more dangerous than a $900 HOA. I'm not joking. A low fee can mean underfunded reserves and deferred maintenance. A higher fee can mean fully funded reserves, proper insurance, consistent maintenance, predictable budgeting, security. The fee is the symptom. The structure is the diagnosis. In Florida, non-HOA living can be incredible, but buyers need to understand what it actually means. In non-HOA neighborhoods, you are self-governed. If your neighborhood ignores roofing, there is no board forcing compliance. If exterior conditions vary widely, the neighborhood looks become very cohesive. And in Florida, external conditions wear properties faster. Roofs age visibly, paint fades quickly, landscaping varies, screen enclosures degrade, variances become visible, and buyer perception drives price. Here's the financial truth most people miss. In an HOA, certain costs are pooled. In a non-HOA, you pay directly. So the real question becomes, are you disciplined enough to self-fund reserves? Because in HOA, you are forced to reserve. In non-HOA, you must choose to reserve. Non-HOA works best for homeowners who are disciplined and capitalized, who plan, who budget, who replace systems on time. If you are that homeowner, non-HOA can be exceptional. If you are not, non-HOA can become expensive and chaotic. Not because the neighborhood is bad, because the planning model is weak. Now, let's talk about condos briefly. A condo is not just a home. It is shared ownership of a financial machine. The association may be responsible for structural components, roof systems, exterior walls, common plumbing, elevators, balconies, and when reserves are underfunded or regulated, changed capital demands become immediate. That is where large assessments happen, not randomly, mathematically. If you do not understand the financial machine, you should not buy into it. An HOA in Florida, review the documents, not casually, review them. The current year budget, the last 2 years of financial statements, reserve schedules, fee increase history, pending assessments, insurance coverage and deductibles, litigation, delinquency rates, board meeting tones, because governance personality shows up in documentation. Personal notes often signal stability. Chaotic notes often signal instability. Let me bring this back. I don't want an HOA. A more strategic version of that sentence is, I want to understand what structure I'm buying into and what risk it transfers to me. HOA or non-HOA is not a personality choice. It is a structural decision. And in Florida, maintenance and insurance are part of the assess. Structure is part of the asset. Governance is part of the asset. And the buyers who win long term, they understand how that structure is. So, if you're considering a property in Florida right now, comment HOA and tell me the type of property you're looking at. Single family, townhome, condo, planned community, or acreage. And I'll tell you what would you need to look at first.